Well, good Monday to each and every one of you, and welcome to our webcast on trading a smaller account. I'm Connie Hill. While Barb is out on Project Barb 2.0, I'm filling in for her here as we try to build our smaller account. Now, I want you guys to respond to this question I'm going to ask you. I want you to chat it in here. What are you noticing are hot topics in the market or maybe hot industry groups? And I want you to go beyond AI, right? You could throw AI out there, but there are going to be little slivers, different areas possibly of AI. So I'd like you to shout or chat that out. And as we look at some of our newer trades today, we're going to pay attention to where they're coming from, what the companies actually do. I think it's important to be engaged with what the company's doing. All right. Now, I am happy to see you here. If you have questions, chat those in. I'll try to keep my eye on the chat. Now, I've got my good friend out there, Mike Fairborn. He will help me kind of help field some questions as well. Maybe there's things that I can't quite get to. Mike will have my back, and so happy he's here. He can handle any kind of question you want to throw at him. Let's go through our disclosures and lay out our agenda. Options carry a high level of risk and are not suitable for all investors. We will be using the Paper Money software application. This is what you download to your computer. It is the most robust version of Thinkorswim, very helpful for option traders, which we tend to do a lot of in this class. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. Now, as I'm looking at the chat here, you guys have got some great ideas here that you're chatting in here. Metals, tariffs, crypto, consumer staples, industrials, defense, another defense, materials, metals, nuclear and defense. All right, excellent. David says small nuclear energy. Perfect. Those are some of the industry groups, some of the technologies that we want to be paying attention to. Because they are getting a lot of press, they're getting a lot of news. And when stocks have some news, what happens has a tendency to help them move as well. So we can benefit from that. All right, upcoming workshops. We finished yesterday. We had a fabulous weekend with you guys down in Santa Clara. Ben Watson and Joe Mazzola, and I believe Kevin Horner were down there for you. Hope if you were there, you had a great time. Let us know. Coming up, we've got Chicago, Washington, D.C., Dallas. If you can hit any of these, you guys, go ahead. Try to make it, okay? It'll be well worth your time. You would maybe even send me flowers because I sent you there and you're like, oh, Connie, this was so awesome. Yes, you get some flowers. And I'm just kidding on the flowers. All right. Typically, we want to take a look at what the markets are doing, what's going on. We're always going to be doing some new example trades. I have several lined up. I'm hoping we can get to all of them. And then spend a little bit of time on managing existing trades. That's one of the important elements, actually, of our class is, okay, fine, we got into something. Now what? How do we manage it? Right? And kind of following up on it. And I've got a couple examples I think will be helpful for us to take a quick look at here today. All right. Looking back here, yeah, quantum computing, Michael. Thank you, David. Smaller nuclear energy. Yeah, you guys are getting it. Very good. All right, let's go take a quick look at what our markets are doing here. We've got the SPX up. And what was it? Thursday, SPX put in another new all-time high. Just kind of feels like it's a churning, right? It's not like zippy, but just kind of churning along, little peaks, little troughs, edging its way higher. The blue line's my 10-period moving average, and notice how nicely it's kind of stayed on that 10-period moving average. And this red line is a 30-period moving average. So it came down to there one time in the last few weeks, but not very much. And so we'd say, yes, trending pretty strong. The RSI here. What's interesting about that is that this peak here on the RSI is lower than the previous peak, even though the price went a little bit higher. So what do we call that? We call that a divergence. Is it that big of a deal? I don't know. It could be. It could amount to maybe things are starting to slow down. Maybe things are changing. Just something to keep our eye on. Okay. Let's look at the NASDAQ here as well and our NDX. It put in its high. I think that was on Wednesday that it put in a new all-time high, and kind of a similar thing, bouncing here off the 10, dipped to the 30, which is, kind of the shortest area or shortest range in intermediate moving averages. Well, if we're talking about a 30, 40, 50, kind of on the short end of that, coming down there. And it had the same thing happen here on the RSI, where as it's been running up and making higher highs, we expect our oscillators to make higher highs when price makes a higher high. And when we don't see that, that's what we call a divergence. And I could come in here and just kind of connect the peaks here and show our peaks right now, maybe pulling back a bit. So it's just kind of like a yellow flag. Pay attention, maybe something might change here, but we always want to wait for confirmation of the change. And that confirmation comes in the price action. Yeah, Rocky says railroad tracks are working well here. Yeah, our 10, our 30, just chugging along, both of them there. Yeah, like that. We'll take a quick look at the VIX. I think the VIX is still up this morning, maybe a little bit. Markets are fairly flat, so that's not too surprising what the VIX is doing. I'm going to zoom in here. I wanted to get rid of some of those super high days so we get a little definition here. Down in a lower area, right? 16, 17, 18 is a little bit lower. 15, it's kind of been in that area for, say, the last 3 weeks or so. And so as that volatility's dropped, uncertainty, yeah, then the market's been able to do its little grinding a little bit higher and a little bit higher. All right, so overall, we're probably still feeling a little bit more bullish on the markets, aren't we? Right? We're being aware that maybe some weakness is creeping in, but we're going to watch for evidence of that. We're not going to get all excited and shut down a bunch of trades because maybe something might happen, right? We're going to wait for the evidence. We're going to trade what we see. Now, talking a little bit about, what are some of the hot topics? What are some of the hot industry groups that are getting a lot of press, getting a lot of news, and getting a lot of movement? Okay. First one we're going to take a look at here is SMR. NuScale Power. If we come over here to the Analyze tab, have fundamentals selected. Then you can just take a quick look at what the company does. It looks like it's in the industrial sector. That sector's had a lot of stocks moving. And it says they are small modular reactor technology solutions. Okay, does that sound like nuclear energy? Yeah, it does. And it kind of tells you, I'm not a big electricity person. I don't really know what 77 megawatts means, but it could be powerful. I don't know. All right. But that's what the company does. It's headquartered out of Oregon. Okay. So we're like, okay, small nuclear reactor type company. As far as the chart goes, I put this on a weekly chart for a minute to take a look at what was going on. And then I saw this big, nice long flagpole. And then we see the stock kind of pulling back. And this one is kind of making its presence is longer. Its formation in this flag is a little bit longer. The formation of this flagpole is a little bit longer. So it's a little bit wider of a pattern. Sometimes we see this exhibit in a weekly chart like we have here, or sometimes we see it in a daily chart. So I wanted to give you that weekly look so you could see what we're seeing here. And then we'll come back here maybe to, say, a 3-month chart. What does it look like right now? It looks like maybe it's kind of breaking out of that flag formation, right? That consolidation. Maybe it wasn't evident on Friday. Maybe it was the start of it on Friday, and today we're getting a little bit of the follow through. Okay. So some bullish traders might decide to use that as an entry point, wouldn't they? All right. Ricebird says SMR potentially more applicable to powering AI data centers. Yes. We've got our AI chips, we've got the semiconductors, right? And then we have the power needed to run those semiconductors. And that, you're exactly right. That's kind of where this particular stock fits in there. Now, if we come over here to the trade tab, I want to look at implied volatility. It's a little high, isn't it? I mean, we have several of these in the 90s, 116. I mean, there's a lot of volatility priced in there. So we're going to take that as our cue to say, all right, well, what strategy might work well if we've got implied volatility really high. Okay, shout it out to your computer screen or your dog or whatever's there, right? What would you say for you personally? Might be a little bit different, right? Not everybody is going to have exactly the same answer, but maybe some sort of selling strategy in there. As we pull up here, we've got lots of weeklies. We are going to focus on the August 15s here. It really has the most open interest in tighter spreads, which is what we need as traders, right? We want that tight bid-ask spread. What's interesting here is many times if we're maybe going to sell a vertical like we're looking to do right here, a short put vertical. Perfect. Love your guys' response. Yeah, short put vertical. Vic is saying a CSP. I think that means credit spread. I think that's where you're going with that, Frankie. Yeah. We could do a debit spread. That would involve some selling strategy, but this is kind of interesting here. Usually we'll try to focus on a 30-something or high 20-something delta or low 40-something delta, and this has a lot of choices here with it. We've got single dollar increments, which makes it nice. And I'm going to look at something I had pegged a little bit earlier. Let's see if it still looks good. I had pegged doing a 32 or 33.32 short put vertical. Look at the delta on that. What is it? 26. So I don't know that I'd even call it high 20s at that point, right? It's almost more like mid 20s. Probability of expiring out of the money right now, about 63%, which is when we're selling probabilities, we like to see that. Let's see if we get a good enough return here. All right. With a 20-something delta. We'll see if it's as good as it was when I was looking at it earlier. We'll hit sell vertical. Right now it's at about a 31-cent credit, which is pretty close. It's just 32 cents when I was looking at it earlier. So not much of a change here. Is that a good enough return? Well, let's run some numbers. Grab our calculator here. $1 wide spread. So 31 cents is our max potential gain here. Oh, it changed to 32. I'm going to lock in the 32. Okay. So if we take 1 minus 32, that's going to give us our max theoretical loss. So we're going to take 0.32 divided by what? How about 0.68 here? Oh, whoa, that's going to give us a 47% churn or return on that. That's pretty juicy. Sometimes we'll see bigger numbers when maybe we're selling 40 to 50 days worth of time. But because the implied volatility is so high in here, those premiums are pretty juicy that we can get that kind of a return. Now, some of you, if you wanted to even go further out of the money, you could. We're going to stick with this 33, all right? And really, what do we need the stock to do? If I come in here and I find where 33 is, which is about, well, I'm going to try to get it pretty close. Okay, there's 33.17. We just need it to stay above there. It can float along here. It can jet up, right? Earnings are not for a bit. They're not until August 7th. So could this play out before we even get close to earnings? Yeah, absolutely. It certainly could. So let's go ahead. We're going to place a trade on this. Now, if our max theoretical loss here is 68 bucks, how many contracts can we do? Oh, I forgot to tell you. Let's go back to our slides. For our what we're willing to kind of use in our class. We've got a $20,000 account. We're willing to buy up to $5,000 per position if we're doing something with a stock. Max trade risk is $400 to $500. We're not going to exceed that. Okay. We're going to look for short to intermediate time frames. We'll look at both bullish and bearish. Right now, we're looking a little bit more bullish. We're eyeing right now this short put vertical on this because the implied volatility is so high. But, you know, somebody could very well say, I pointed to short puts. Somebody could do short puts. I'm looking at a short put vertical here on this trade. Somebody could also look at a long call vertical. Okay, it doesn't have to be just that strategy. Also might have something to do with what do you think its likelihood to move is? You know, what is it? All right, let's head back here. 32, I asked you how many contracts we could do. Some of you mathematicians may have figured that out already. Some of you are saying 7 out in the chat. So let's go with the 500. divided by 68 bucks per contract. Yeah, we can do 7 contracts, so we're going to. All right, here we go. We're going to pump it up to 7. We're going to change this to a first trigger sequential, and we're going to put in a buyback order here. Buy back the order if it hits our profit target. Sometimes when people are doing a hedged position, they don't like to put in a stop. You're going to have to do some paper trading, figure out for yourself what you personally like to do, what your personal rules are going to be. What our rules are going to be here is if we get our profit target, man, we're going to take the money. We're going to be happy. We're going to take our chunk and get out and look for something else. Move on. Okay. As opposed to waiting to get another penny and another penny. Okay. Because sometimes that can take a long period of time and you end up maybe risking more than what you really want. So let's do a first trigger sequential, and we'll put in an opposite order. And the chunk that you decide you want to get out on, you get to decide. Is it 70%, 80%, 90%? This is a pretty juicy premium, so let's maybe go on the side of not being so, I'm going to say aggressive, meaning kind of greedy. We're not going to go the greedy route. If we're going the greedy route, we'd go, let's get 90% of that 32 cents, which is 47%. Let's, get it all. We're gonna back off of that expectation. Okay. So what if we get of our 32 cents? What if we collect on this one? What if we collect? Let's go with 75%. We collect 75%. Only 25% is left. All right. That says, all right, we're going to look at 25%. Let's go buy it back at 8 cents. Now, do you think it's possible that it could do that before we meet again? Do you suppose that could happen? And when I say we, meeting in our trading a smaller account class. Yeah, very well could. All right. So we'll put it there as a limit order. We want to make it good till canceled. And then, right, let Thinkorswim Automation help you out. Go collect on that. All right. First one's in. We just got filled. All right. We got filled at 33 cents. Okay, so we don't need to be greedy because we're getting a pretty fat credit here for 32 days worth of time. All right. Next up, I want to address something that was an ask from our survey on Friday. I actually didn't notice there was a survey, which I apologize for because I said, I don't think we have a survey, but we actually did have a survey. Thank you to those of you that filled that out. One of the asks was, how can we tell when how can we find a class on a particular strategy? How can we do that? Okay, I want to answer that question before we go on to our next trade. So we're going to do a couple of things. We're going to come out here to our browser window. And one of the ways you can do that, be a subscriber to our Trader Talks channel. Just click on that little blue YouTube icon. Down in the bottom right corner of your screen. Just do it once. If you do it a second time or a fourth time or a sixth time, it's going to unsubscribe you. Okay, so you just need to do it once. And we've got a lot of classes that are geared to just one little strategy. Okay, so you could come down into our playlist. You could come down here and, for example, I'm going to give a couple of different examples here. I teach a short verticals class. That's the only kind of trade we do in that class are short verticals. Okay, so we just put on a short put vertical. That's all we would do in that class. So maybe if you're trying to hone those skills, you might spend some time there. I wanted to come over here to the trading covered calls and short puts. If that's a strategy, you're like, I really kind of want to get better at that. You may come over here and go to some of Cameron's classes. Okay. Now, the other way you can do this is if you have a strategy and you're like, I don't really see that maybe we teach that as a topic, but you're interested in it. So something like collars. That's where we might sell a call and buy a put kind of as a hedging strategy. Do both of those together. So if you're interested in collars, who's taught a class on collars lately? Okay, so Cameron looks like he did one. Looks like Ben Watson did one. The collar strategy defined. It looks like Brent Moores did one having to do with collars. Actually, Brent's got 2 or 3 here. James did one. Okay, so if you're looking for maybe something that doesn't have a dedicated class, that is a great way to do it. Just put it in the search field, pull that up. Okay, so hopefully that will help you as you're trying to find the content you're looking for. I'm going to show you one last thing here. If I go to home on our Trader Talks page, we have something that called bite-sized content, and I'm doing some bite-sized content on the Thinkorswim platform. Lots of you are new to the platform. You kind of learn what you need to know, right? And you build your skills from there. And so I'm showing you a short little mini videos how to do certain tasks, okay? So one that we just got published earlier this morning, I haven't even had a chance to put it out in my X and advertise it, is if you want to know how to create custom columns on your tab, your trade tab, when you're looking at options, just have a short little video to show you that. All right, let's get back. All right, Mike's pasted, it looks like a particular playlist out in the chat. Thank you so much for doing that, Mike. Let's head back to our Thinkorswim. Let's go back here to our charts. Next up, let's see if you've heard of this stock, XYZ. XYZ used to be called Block. I'm not sure that this trending idea or this hot topic idea came up in our discussion earlier. Those of you that were kind of throwing out some ideas of things you'd recognize. What does Square do? Okay, let's go to the Analyze tab, Fundamentals. We'll take a quick look. Well, it says they're in the financial sector. They have a focus on commerce and financial products and services. They operate two segments, Square and Cash App. Well, those are financial apps. You may have gone into a store that, or even, I've noticed this in my area, we've got fruit stands out, right? Fruit and vegetable stands, because it's summer, fresh veggies and fruits are coming in. And they'll have a little square and a little apparatus that just sits right there with their smartphone that they can run your card so that you can buy the tomatoes and cantaloupe and corn you want. Okay. Yeah, that's that company. There's another company called Toast Point of Sale Systems. Thank you, Vic. That's the proper term. Yeah, point of sales. But they're not sitting out there with a big old cash register like we've seen in the past. We're talking smaller apparatuses. That trending? Absolutely it is. Okay. So on this stock, what's it doing? Been staying nicely above that 10-period moving average. It looks like Friday it came out to the 30. What's it doing today? Well, looks like it could be bouncing off that 30, going above the 10. It could be, for those of you that try to focus on a close above the high of the low day or a move above the high of the low day, it certainly has moved higher than the high of the low day. We're not closing the market yet to know if it's really going to close there, but it definitely is traded there. So we're going to get in on that type of a move. All right, that little hold or trade above the high of the low day. All right, let's come over here. Let's look at implied volatility. Not nearly as high as what we were seeing in SMR, right? They were in the 90s and 100s. They were extreme, but this is still pretty high volatility. I wanted to check one other thing here. I want to go make sure we know when earnings is, right? We always want to be aware since we're getting into earnings season again. It looks like they're slated for August 7th. Today's the 14th. Could some moves take place before we even get to earnings? Yeah, they absolutely could. Okay. So let's come back here. Again, they have some weeklies we could pick through if we wanted to. We're not going to for this particular one. Let's see if this still looks viable. Okay, we're going to go to the August 15th, 32 days worth of time. This stock has been moving pretty well. All right, so We're going to do a selling strategy, but we're going to do one that maybe requires a little bit more directional movement on the part of the stock. What I was looking to do here is maybe a 65.70 long call vertical. Lots of contracts out there. Oh, we'd love to see that. 4,000 contracts, right? Tight bid-ask spread, only 10 cents there. And we maybe even could get filled at the midpoint. We shall see. So we're going to do a buy vertical. And I'm going to click on that lock there and hold it in place. It's a $5 wide spread. So we would be risking 265 to make what? 235. Now, sometimes we might want that to be a really high return. It doesn't have to be. This particular one's going to be a little bit more conservative because we're going to risk more than what we have to make, okay? If we're willing to risk 265 to make 235, oh, I did that in the opposite order. Let me clear that out. We want 235 divided by 265. There we go. It's about an 88% return. I don't know that you can feel too bad about that, right? So it's still needs the stock to move. Doesn't need to move far. Well, we want it above 70, and right now it's at 68.75. So we want it to move in the next 32 days beyond $1.25, which a stock that's been hanging on its 10-day and bouncing. I mean, that shouldn't be too hard. Right there where my mouse is close to 70 bucks. And that's not a big ask of this stock. Today's high was 69.84, so a few pennies higher than that. All right. So let's position size this. 265, dang, if it were just a little bit lower, like 250, we could do 2 contracts on it. But we want to make sure we're not, that we're not loading up when we shouldn't. We don't want to extend our risk on that. Okay. So we're just going to do the 1 contract. I was kind of hoping it would have pulled back a little bit, been a little bit cheaper, but it's not. So we're just going to go with it. We're going to create a first trigger sequential. We're going to create an opposite order. And then the process to determine what your max theoretical gain or loss is different on a debit spread than a credit spread. Okay. So on our credit spread, if our max, I'm going to come up here, maybe use this space right here. And there's our 500 max risk. If we are risking 265, we can just do 1 contract here. I wanted to talk about targets and stops here. On this one, we're not looking, I mean, if it breaks down financially or technically, if it comes in here and puts in a lower low, we'd be concerned. We might want to get out. But initially, we're just going to put in here a profit target. And if this thing bounces and keeps going up day by day, we're going to look at it. We're going to see if we need to adjust our stop loss, if we want to start cinching it up, if it does what we're expecting it to do. If it takes a little bit of time, if it dilly-dallies a little bit, right? Like along here, it's just kind of moving kind of slowly, but it's going the right direction. If it does that, we'll be able to kind of cinch that up. So our max theoretical gain here is 235. Let's go for 75% again. Okay, we go for multiply that by 0.75. That equates to 176. So we're going to add 176 to our 2.65. That's the net debit that we're going to look for. So we'll see if the calculator will keep that in its memory there. If I add 265 to that, that looks to be about $4.41. All right. We like it. We're going to go ahead. We're going to submit it for that, $4.41. And, sometimes I'll talk a little bit about not trying to squeeze every little penny out of verticals, right? I do that with my toothpaste. I try to squeeze, all the toothpaste out. I don't like to be wasteful. But sometimes when we're trading spreads and we've got a big chunk of the gain, sometimes it doesn't make sense to risk, gee, I want to collect 15 more cents and I'm going to risk 265 of, my 265 I've already got, or whatever the number happens to be, for that additional little teeny bit. So we're not going to do that. we're going to put this order out there. We're going to hit confirm and send. And actually, I forgot I needed to stick it in this bucket. I forgot to stick the first trade in there. I'll go back and do that. All right. Paul wants to know, is it okay to do a $1 wide vertical? It absolutely is. In fact, in a smaller account, I'm sorry, I've got an itchy nose this morning, guys. In a smaller account, it's really nice sometimes if you've got a $1 wide spread. Okay. On our SMR, our very first trade here, we had $1 wide spreads. It makes it nice because if you just need to do one contract in a smaller account, usually it helps that become a lot more feasible to be able to do that. Okay. So on our short put vertical, yeah, it was nice. We're able to do 7 contracts on it. Although your account size might be different, right? What you risk in it. So absolutely. Thank you for asking that question, Paula. And the answer is absolutely yes. Okay, next up. Let's look at this guy. Billy. Ooh, I've seen Billy, B-I-L-I. Now up here in the title, it says it's an ADR. What does that mean? Foreign company. Okay, let's go to our Analyze tab. Got our fundamental selected. It's in the communication services sector. What do these guys do? Well, they're headquartered out of Shanghai, so they're Chinese. Offer entertainment services for the younger generation, for the people in China. Okay, so kind of sounds like a gaming-ish entertainment type stock. Okay, ADRs when they're a country that's not the United States, there's additional risk because the reporting requirements may not be the same as what we have here. Their rules of engagement, what they do, can be different. And there may be some of you that say, I'm not really comfortable doing that. And if you're not, that's just fine. Okay, but come out here and look. Know what the company is doing. Be aware. Is entertainment on your phone in China a big deal right now? Yeah. Mobile games? Absolutely. Yeah, Paul says, I avoid ADRs because sometimes there's too many fees, and that could be the case. Yeah. Paul says, or P.L. Anderson says, will you explain how movement impacts profit and loss? Yeah, let's do that on this trade. I drew in here also a price pattern formation that it has. Okay, we have an ascending triangle, which is a bullish continuation pattern. Awesome. We love to see bullish continuation patterns. Now, what's nice about this stock is it popped up above that resistance area here. It came back and retested it. And what's it doing today? Yeah, it's bouncing off the retest. This can be the first entry into an ascending triangle formation. The retest here can be your second entry on an ascending triangle. So we're going to take that second entry. All right. Now on this one, it is a $22 stock. So that might open up the possibilities. What about its implied volatility? Well, it's in a high range, but not nearly as high as the 2 previous stocks that we looked at, right? The 2 previous stocks had quite a bit in here. On this one, if somebody did not want to do options, they just want to do the stock itself, you certainly could do that. We're going to bring in and do an option strategy here. We could, if we wanted, we could say, well, the height of our triangle could be our target here, very short term. And that is up to about 24.38, and it's roughly, okay? We're going to kind of skinny back from there. Let's go 24.35 as our potential target here. And because options are not expensive out the nose, all right, we might consider just buying a long haul here with a target and a stop. Now the stop on an ascending triangle, if the price comes, oops, I didn't mean to zoom in quite like that, but if the price of the stock comes back below here, now that it's bounced off here of support, we expect it to stay above there. If it goes below there, then we want to get out. Okay, so I was looking at a pretty tight stop here, about 21.16, which is pretty close to where my mouse is here. So not giving it much leeway. Okay, because if it's doing that, then maybe the trend is starting to reverse on us. Okay, and so we're going to put in a tight stop and a fairly tight target on this one. My screen froze for some of you. I'm sorry. Hopefully that refresher screen will help. All right. Nora says the screen is good. All right. Let's continue here. With this kind of a move, we would expect it maybe not taking a huge period of time. Okay. So we could come in here. We could say, well, maybe the 30s if it moves in a week, but typically we want to buy like an extra month's worth of time so that theta doesn't really wear down the price of the option, right? So we could come out here to September. We do have single increments here. And we're going to go with this first one that's in the money. It's 22.45. We're going to go with this 22 strike price out in September. So we're going to buy a little bit more time. We're going to queue that up and we're going to put in a target and a stop based on, right, the ascending triangle, those values. So we're going to say a first trigger sequential. We could do 2 contracts here, right? No, we can't do 2 contracts. We're going to have to stick with 1 contract here. It was a little bit lower earlier, and I was thinking we could do 2 contracts, but 500 is our max, so we're just going to do the 1 contract. That's just fine. Let's go ahead and create an opposite order. We're going to put it as a market order and then put in the conditions on the next screen. Click on that gear. Let me drag it over to the right screen so you guys can see it here. All right, so if we hit our target, if the stock gets greater than or equal to, I pull off that target a few cents, we're going to go for 24.35. Or if it gets to be less than or equal to, I said here, we said 21 point, I didn't write it on the screen, but I had put 21.16. Okay. So we're not tolerating a lot of movement. We're just want the stock to execute quickly, go up and hit that target. The question that came in here, I said I would do this on the next trade. The question that came in is explain how movement impacts profits and losses. Okay. If, let me go ahead and save this. Let's go ahead and submit it. Okay. We want to make this good till cancel. We don't want to go set it up every day. Let's just do it once. Confirm and send it to our smaller account grouping. And, you know, kind of looking at here, if the stock dilly-dallies and goes sideways, so the price doesn't move a lot, that is very much going to erode a long call. Calls, we need them to move quickly in the direction that we expect them to move. We don't want to see dilly-dalliers, okay? Dilly-dalliers, we could do a short put vertical on, right? Because it can go sideways for a bit, it can even pull back, or it could go up like we expect it to. But we want to see that movement, okay? If it pulls down under here, under the support area, where we said, hey, we're going to get out, we would be exiting at a loss. And it impacts a long call more dramatically, a negative move, than it would a short vertical or a long vertical. When you use those verticals, it gives you some buffer room, okay, so that you don't have to be poly perfect. The stock doesn't have to be poly perfect in order for you to be able to make money on it. On a long call, and that's why it's more aggressive, you got to be poly and pol perfect, okay? That stock needs to move, it needs to move quickly, or you could find yourself in a situation of, I need to get out of here. Now, we bought extra time. That'll help with the time decay issues. Okay, so we bought a little bit of extra time, but as soon as it gets to our target, man, we want out. We want to take the money and run. So I hope that gives you some feel for that, okay, in terms of, you know, what could happen with price movement. And we got to watch it every day. We're not going to ignore this. Jay Richardson, if you're on a long call, how much time to give it to make its move? Because we could put one of our exits based on that. You know, it takes about 5 or 6 days for this little guy to move up. Okay, So we're going to give it 5 or 6 days. Do I hope that it makes it before our class on Friday? Oh, I hope so, but there's no guarantees it's going to do that. But we're not, we're going to give it a few days. We're not going to give it 2 months. Even though we bought 2 months worth of time, we're not giving it out there to September to make the move. We're wanting to see the move here in July, possibly into August, but really, realistically, we don't want it to take that long. Appreciate you bringing that up, Jay Richardson. Now, I want you to take a look. I want to show you a couple things that have happened in our account that should make us smile. Okay. First stock that we're going to take a look at is something we put a trade on last Monday. We put on a long call vertical, a 107, 108, so $1 wide spread. We put on a trade. We needed it to move a little bit for us, and it kind of dilly-dallied a little bit until today, made a nice move today. We had put in, if we get a chunk of the target, we're going to take our money and run. What did it do today? Boom, pretty early in the morning as it made that move, it went ahead and got us out of the trade. If I pull that up here, okay, good, it's right here. It was a 50-cent net debit. We were able to get filled. We put in, if we got 88 cents, would be happy campers. We got filled at 97 cents. Sometimes that happens in a real market. Sometimes that happens in a paper market, right? In our paper trading account. Don't expect that to always happen to you, but sometimes it can, especially if orders are first thing in the morning, right? As those prices are jumping around, bopping around like popcorn and popcorn popper, right? Then sometimes you just get those fills. Okay, so that's Roblox. Second thing on this is I want to point out that maybe it has a potential entry signal. Would we hesitate to do another Roblox trade? No, we wouldn't. Not a bit. Right? If something is moving and working for us, we might trade it over and over and over again. Now, another one hit our target as well. This is a trade we placed Friday. Okay, so this is our weekender trade. On our weekender trade, got to get all the right letters here, MSTR, MicroStrategy. We got in here because we saw the breakout. Boom, it gapped up today. It ran up. And what did it do? It hit our target. We just stuck in there on Friday. Okay, so on MSTR, we initially brought in a credit of 150. So it was a short put vertical, $5 wide spread. And we said, if it shrinks down and we get the majority of it, we're going to get out. We said, if we can get out at 45 cents, do it. And that's exactly what it filled us at 8 o'clock this morning. Okay. Do we feel bad about a one-day trade? Heavens no. We love one-day trades, okay? So this particular trade, for the weekend, we netted 105. We could only do one contract on it, okay? So it's kind of a little base hit, right? $105. On our Roblox trade, let me just bring those numbers back here again. On a Roblox trade, we ended up there with about, we had a net of 47 cents. We risked 50 cents for it. So that gave us about a 94% return. On this one, we just did the one contract, just one call contract. That's all we could do. But I take that back. We did 9 contracts. We were able to do 9 contracts. I take that back, okay? And we ended up making $423 in a week's time because we put that trade on Monday. It executed this morning. So that one brought in a little bit more revenue to the kitty, right? Just brought that in. All right. So we're happy with those trades. We've got several we still need to monitor. These are the ones that had the most pressing because they executed here today. All right. There's other ones we need to wait on, right? That are still working away. And you can see which ones they happen to be. We'll follow up on some of those on Friday. All right, everyone. What I want you to practice over the next week, I want you to practice paying attention to what these stocks do. Go out to the Analyze tab, go out to the Fundamental Analysis, and see what they do. Are they generating power for AI? Are they a chip company? Are they a gaming company? Are they a foreign gaming company? Okay, so that you're just not like blindly doing it, right? We use a lot of technical analysis, but it's really helpful to know what the stock's actually doing, what it is about. So that's my challenge to you. And as you're getting more familiar with other strategies, practice them out in your paper money account. Excellent. Our time is up, so we've got to sign up. But there was no survey today. If there is one, Michael posted again, but I do not think there was a survey today. But would love to have you follow us. Issue an invitation. I'm Connie Hill, CS. Mike is Mike Fairborn, CS. We'll post educational content throughout the week. As we see it, we post it. Might be something that you find interesting. It's free and easy to do, so I encourage you to do that. And as well as be a subscriber. And if you found this helpful today, go ahead and hit the like button on the way out. That lets others know that this content might be valuable to them as well. Okay, coming up next is advanced charting techniques. We're getting a little bit harder today on a Monday morning. Easy, kind of intermediate with our class. Next one is advanced, all right? Advanced charting techniques. I'll see you this afternoon in my ETF class. You've got to be live to catch it, but I'll see you there at 4 Eastern. Bye-bye.